Tahniah! Siaran langsung ini dibawakan khas kepada anda oleh Akademi YouTuber Malaysia. Sebuah inisiatif e-didik Malaysia dan Kelab Guru Malaysia. Tumpukan perhatian anda. Siaran langsung akan bermula sebentar lagi. Link sijil akan diberikan di hujung siaran ini. Pastikan diisi dalam tempoh yang ditetapkan. Terima kasih.
Hai. Assalamualaikum warahmatullahi wabarakatuh. Selamat datang ke Pusat Tuisyen YouTuber AYU, usaha sama e-didik Malaysia dan Kelab Guru Malaysia. Bermula percuma, selamanya percuma. Baiklah, Assalamualaikum dan selamat sejahtera semua, student yang Madam kasihi sekalian. So, pada kali ini kita bersiaran secara langsung dari channel Madam Fizi channel. So, siapa yang belum subscribe, so silalah tekan butang subscribe sebagai tanda sokongan. Untuk kali ini, Madam rakam, record untuk siaran secara premier. Baiklah, so topik kita pada hari ini adalah revision for absorption costing and marginal costing. This is the topic 9. So tanpa berengah lagi, Madam rasa baik kita teruskan dengan kita punya revision for topic 9. So we start with the question of lumut tax yang berhad. Lumut tax yang berhad produces exclusive wooden door. In October 2011, lumut tax yang berhad has produced 100 unit door. The ending inventory for the month is 25 unit. The selling price per unit is 16,000. Lumut tax has 50 units on 1st October 2011. Estimated overhead costs and actual overhead costs are the same. So dekat sini Madam dah highlight poin-poin penting yang awak kena ambil tahu, because dia ada kena mengena dengan calculation kita nanti. So information for the October 2011 as follows. So dekat sini Madam highlight commission is per unit. Per unit is RM200. So nanti masa nak kira commission, awak kenalah darabkan 200 dengan berapa unit sales. So required prepare comprehensive income statement for the months ended 31st October 2011 for absorption costing and marginal costing, and explain a situation where the marginal costing net income will be higher than the net income of absorption costing. So to answer this question, before you prepare the income statement, first of all, you have to calculate the cost per unit. Tak kira lah dalam soalan tu, dia ada tanya ke tidak untuk kira cost per unit, you still have to calculate it first before you prepare the income statement. So in the question adalah for October, ini adalah untuk total. So untuk kira per unit, you have to divide by the 100 unit because the lumut tax produce 100 unit store. So look at the answer. So for direct material 218,000 divide by 100. For direct labor 134,400 divide by 100 unit. Variable overhead is 50,800 divide by 100 unit, and fixed overhead also 51,200 divide by 100 unit. For absorption costing, you have to include all these costs. Okay, so the total cost per unit is 4,544. But for costing marginal, don't include the fixed overhead. Okay, so the total 4,032 cost per unit. Okay, then we can proceed to prepare the comprehensive income statement. Okay, for absorption costing, okay, the format adalah sama kan? Sebab dia absorption costing, format dia adalah sama macam income statement yang biasa kita buat. Okay, so dekat sini, don't forget when you write the income statement, okay, you have to mention the absorption costing. Okay, kalau marginal, you have to mention the marginal costing. Okay, yang lain tu macam biasa, for the month ended 31st October 2011. So first of all, you have to find out the sales. Okay, the sales unit is not mentioned in the question. So you have to calculate the sales unit. So how to calculate the sales unit? Beginning inventory plus production unit minus ending inventory unit. So berapa tu? 50 plus 100 minus 25. So the sales unit is 125 unit. Okay, darabkan dengan the sales price. So you get 2 million. And then minus cost of goods sold. Beginning inventory plus cost of goods manufactured. Okay, minus ending inventory. So you get the cost of goods sold total 568,000. And then sales minus cost of goods sold equals to gross margin or gross profit 1,432,000. Okay, and then you minus with the operating income. Okay, at the operating income, please be careful about the commission. Okay, so just now we calculate the sales unit is 125, right? Okay, so then you can multiply with the 200 ringgit per unit. Okay, so equals to 25,000. So the operating expenses included commission, advertising, delivery, salary, depreciation, insurance. It total 118,600. So the gross margin or the gross profit minus the operating expenses equals to net profit 1,313,400. Okay, now we proceed to marginal costing. Okay, so as usual, first of all, write down the title. Okay, lumur teks yang berhad, and don't forget after the income statement you have to mention the marginal costing. Okay, so same goes like absorption costing. Okay, first of all, okay, sales. Okay, sales is 125 unit times 16,000 the price unit equals to 2 million. Okay, for marginal costing, what is the format? Sales minus variable cost. Okay, the variable costs include variable cost of goods sold and variable selling and administrative expenses. Okay, now we calculate the variable cost of goods sold first. Okay, so beginning inventory plus cost of goods manufactured minus ending inventory equals to 504,000. And then plus with the variable selling and administrative expenses. Okay, that is a commission equals to 25,000. So total variable cost is 529,000. So sales minus total variable cost equals to contribution margin. So you have to write down the contribution margin. Yeah. Okay, equals to 1,471,000. Okay, after that, we minus with the fixed cost. Okay, the fixed cost included overhead factory, advertising, delivery, salary, depreciation, and insurance. So the total fixed cost equals to 144,800. So contribution margin minus the fixed cost equals to net profit 1,326,200. Okay. So we continue with the B question. Okay. The marginal costing net income will be higher than the net income of absorption costing when sales unit exceeded the production unit, or sales unit is bigger or higher than the production unit. Okay, now we proceed to question Walid Putih Cenderam Berhad. Okay, Walid Putih Cenderam Berhad is a luxury cabinet manufacturer. In January 2013, Walid Putih Cenderam Berhad has produced 40 cabinet unit. Okay, so dekat sini pun Madam highlight the point that you have to take into consideration. Okay, so dekat sini the production is 40 cabinet unit, and then the ending inventory is 10 unit, and the sales price is 40,000. And there are the beginning inventory 20 cabinet. Okay. So the following information is for January 2013. Okay, dekat sini pun Madam highlight per unit, because jangan tersilap kira nanti. So the commission per unit is 500. Okay, macam mana? You have to multiply with the sales unit nanti. Okay, requirement. Okay, 1 Roman calculate the cost per unit. 2 Roman calculate the value of ending inventory. 3 Roman prepare statement of profit or loss. 4 Roman to calculate the adjustment for the net profit. And 5th Roman give the reason why the operating income is different under absorption costing and marginal costing. Okay, now we look at the answer. Okay, the cost per unit for absorption costing. Okay, don't forget to divide by 40. 40 unit of the production. Okay, now for cost per unit for absorption costing equals to 28,400, and cost per unit for marginal costing is 25,200. That is the answer for 1 Roman. Okay, now we look at the suggested answer for 2 Roman. Okay, they need you to calculate the ending inventory. So the ending inventory cost for absorption costing. Okay, just now you highlight the ending inventory unit is 10 unit. So for absorption costing, you must 84,000. For marginal costing, okay, 10 unit of ending inventory multiply with 25,200 equals to 252,000. Okay, for 3 Roman is to prepare the income statement. Okay, now we prepare the income statement for absorption costing first. Okay, sales. Okay, the sales unit is not included in the question, so you have to calculate. The beginning 20 plus the production unit 40 minus ending unit 10. So berapa tu? 20 plus 40 minus 10. So 60, bukan, 50 kan? Okay, so equals to 50 unit. Times with 40,000 sales, okay, price, so equals to 2 million. Okay, now you minus with the cost of goods sold. Okay, cost of goods sold is the production. No, the sales unit is 50 okay, multiply with the cost per unit of absorption costing equals to 1,420,000. Okay, actually ada dua cara awak boleh buat dengan cara nak kira cost of goods sold, okay, adalah dengan beginning inventory plus good of manufactured minus beginning inventory plus cost of good manufactured minus ending inventory. Okay, so you minus the sales minus with cost of goods sold equals to gross profit 580,000. Okay, then minus with the operating expenses. That is the selling and administrative expenses. That is the commission. Okay, 500 times 50 unit. 50 unit is the sales unit. Why you pick the sales unit, not the production unit? Because it is under selling and administrative expenses. Okay, so gross profit minus net income equals, gross profit minus the total expenses. The total expenses is 259,000. So you get net income 321,000. Okay, now we proceed to income statement for marginal costing. Okay, so how to do the marginal costing? Sales minus variable cost. Okay, the variable cost included variable cost of goods sold and selling and administrative expenses. Okay, so sales 2 million minus the variable cost. Okay, cost of goods sold 1,260,000 and the selling and administrative expenses for variable expenses is 25,000. So you get contribution margin 715,000. And then you minus the fixed expenses. Okay, the total fixed expenses equals to 362,000. Okay, the fixed expenses included fixed overhead, advertising, delivery, salaries, depreciation and insurance. So the net income total to 353,000. Okay, now we look at the question for Roman, that is the net income adjustment. Okay, so net income for absorption costing just now is 321,000 plus beginning inventory. The beginning inventory unit is 20 unit multiply with 3,200. So what is the 3,200? 3,200 is the fixed overhead per unit. Okay, you can see, right? Okay, so the beginning inventory equals to 64,000 minus ending inventory cost. The ending inventory unit is 10 unit. Okay, multiply with fixed cost per unit 3,200. So you minus 32,000. It must be equal with the net income of marginal costing 353,000. Okay, now, okay, why is there is the difference? Okay, the difference is because of the why. Okay, the question just now is why the net income for absorption costing is different with the net income of marginal costing. Okay, the answer is because of the fixed cost element exists in the ending inventory in absorption costing. Okay, now we continue to next question. That is the Dirin Cantik Senyam Berhad manufactured various type of baju kurung. A pair of baju kurung is sold at 120 ringgit. Okay, Dirin Cantik Senyam Berhad target the production and the sales of baju kurung of 108,000 pairs for 2015. Here are the costs for a pair of baju kurung. Okay, so dekat sini madam dah highlight, okay, the important points. Okay, so here is the fixed production overhead is 25 ringgit. Okay, madam highlight juga because the fixed production overhead is ada dekat absorption, tak ada dekat marginal. Okay, and then the additional information, the fixed cost of administrative is 36,000 per year and commission expenses are 5% on sales revenue. Actual fixed overhead is 225,000. Okay, so sini semua madam dah highlight. Okay, so you have to take note when it goes to the calculation. Okay, here are the production of the sales of baju kurung for January and February 2015. Okay, the production for January is 9,000 and the sales is 7,000. Okay, so apa maksud dia? Okay, so maksudnya ending inventory in January berapa? 9,000 minus 7,000. So the ending inventory is 2,000. So ending inventory in January will be the beginning inventory in February. So beginning inventory in February is 2,000. Okay, so you can also calculate the ending inventory for February. So beginning inventory 2,000 plus production 7,000 minus sales 8,000. So berapa ending inventory unit? 2,000 plus 7,000 minus 8,000. So the ending inventory unit for February equals to 1,000 unit. Okay, please jot down at your paper. Okay. And one more yang madam highlight di sini adalah di CSB uses a normal costing system. Okay, when it goes to normal costing system, you have to calculate apa? You have to calculate over applied or under applied. Okay. Okay, so madam rasa kita berehat sebentar before we look at the questions. Okay, kita sambung dulu dengan iklan.
Alah, apa ni? PKPB lagi. SPM pula ditangguhkan. Jenuhlah nak bayar yuran tuition. Pernah dengar tentang tuition percuma? Kami di Akademi YouTuber menyediakan tuition online secara percuma kepada anda semua. Ada prasekolah, sekolah rendah, sekolah menengah, STPM juga untuk matrikulasi. Percuma je. Jom layari laman sesawang www.academyyoutuber.com.
Okay, so kita sambung semula ya. Saya hope semua student masih stay tune okay, dengan channel Madam Fizi. Okay, now we continue. Okay, so what is the requirement? Okay, one Roman is to calculate the cost of a pair of baju kurung using absorption and marginal costing. Second Roman is to prepare statement of profit or loss for the months ended February. Okay, buat February saja jangan buat January. Okay, using absorption costing and marginal costing. And third Roman is to calculate the adjustment of net profit for both method. Okay, now we look at the answer. Okay, so for absorption costing, you must include the direct material, direct labor, variable overhead and fixed overhead. Okay, dekat soalan dia dah cakap cost for a pair of baju kurung. Okay, so maksudnya ini dah kira per unit. So ambil je terus maklumat. Okay, so cost of baju kurung using absorption costing is RM70. While cost of baju kurung or cost per unit for marginal costing, okay, you have to calculate direct material, direct labor and variable manufacturing overhead only. Okay, so the total cost per unit is 45,000. Okay, now we answer the second Roman, that is to prepare the income statement. Okay, just now it mentioned that this company use a normal costing. So if you use a normal costing, before you prepare the income statement, you have to calculate whether it is the over applied or under applied. Okay, so first of all, okay, you calculate the applied overhead of fixed manufacturing overhead. Okay, just now, okay, at the question, the fixed manufacturing overhead yang Madam dah highlight tadi is RM25. Okay, and then you multiply with the actual. Okay, cuba tengok dekat question, what is the actual? Okay, the actual production is 7,000. Ni Madam dah highlight. Okay, so applied overhead is RM25 multiplied with 7,000 unit equals to 175,000. While the actual fixed manufacturing equals to 225,000. Okay, this information also in the question just now. Okay, Madam pun dah highlight ni. Dekat additional information, actual fixed overhead is 225,000. So it means that the applied overhead is less than the actual overhead. So kita dapat under applied fixed manufacturing overhead of RM50,000. Okay, so dekat sini pun ada cara lain untuk calculating the fixed manufacturing for over or under applied. Okay. So now we look at the answer for income statement. Okay. So mula-mula write down the title. The company name is the Diri Cantik Syamrahan. Income statement, absorption costing for the months ended 28 February 2015. Okay, so sales equals to 960,000. Sila buat jalan kerja ya. Minus the cost of goods sold. Cost of goods sold, beginning inventory plus, Madam dah explain tadi macam mana dapat unit beginning inventory. Okay, plus the cost of good manufactured. Okay, 7,000. Okay, and then minus ending inventory. Madam pun dah explain tadi macam mana dapat ending inventory unit. Okay, so equals to 70,000. So cost of goods sold equals to 560,000 plus, okay, tadi kita ada kira under applied fixed overhead. Betul tak? Okay, if under applied, we have to add. Kita kena campur. Kalau over applied, kita kena tolak balik. Okay, so just now we calculate, kita dapat apa? Under applied. So you have to plus with the under applied fixed overhead, that the RM50,000. Then you get the adjusted cost of goods sold 610,000. Okay, so sales minus cost of goods sold equals to gross profit 350,000. And then as usual, you minus with the operational expenses. That is the commission expenses. Just now it mentioned 5%. So 5% you have to multiply with the total sales 960,000. So you get 48,000. And then for fixed admin expenses is per year. So you have to divide by 12 months. Okay, equals to 3,000. So total operational expenses is 51,000. Gross profit minus the operational expenses, kita dapat net profit 299,000. Okay, now we look at the income statement for marginal costing. Okay, for marginal costing, sales 960,000 minus the variable cost. Variable cost include cost of goods sold, okay, and selling and administrative expenses. Okay, kita kira dulu variable for cost of goods sold. Beginning, okay, beginning inventory plus manufacturing good minus ending inventory equals to 360,000 plus with the commission expenses, that is for selling and administrative variable, for 48,000. So total variable cost equals to 408,000. So sales minus variable cost dapat contribution margin 552,000. And then you minus the fixed cost. Okay, the fixed cost, that is for the fixed manufacturing overhead and fixed administrative expenses. Okay, equals to 228,000. So contribution margin minus fixed cost, kita dapat net profit 324,000. Okay, move to question 3 Roman, that is for adjustment, okay, of the net profit. Okay, net profit for absorption costing equals to 299,000 plus fixed overhead for beginning inventory, that is the 2,000 unit just now we calculate. Okay, multiply with 25 ringgit, that is the fixed cost per unit. Okay, and then minus with the fixed overhead ending inventory, that is the 1,000 unit we calculate just now. Okay, the calculation also here. Okay, here is the calculation. Okay, multiply with the fixed cost per unit, 25 ringgit. Okay, and then you get the 324,000, that is must equal or same with the net profit of marginal costing. Okay, so I hope you can understand. Okay, now we proceed to next question, that is the Kaswari Enterprise. Kaswari Enterprise manufactures and sells a food product. Below is the Kaswari Enterprise production and sales information for January and February 2016. Okay, here you can see the sales unit, the production unit, the selling price per unit, the variable cost per unit, the fixed overhead, and the fixed sales and administration expenses for January and February. Okay, KE uses the output unit. Okay, the output is the production unit as the basis of absorption of fixed overhead. The production unit is estimated to 16,000 unit per month. Okay, requirement. First, calculate the cost per unit. Second, Roman, is to prepare a statement of profit or loss. Third, Roman, is to do the adjustment of the net profit. And fourth Roman, explain why there is a profit difference under the absorption costing method and marginal costing method. Okay, B, state 3 advantages and 3 disadvantages of marginal costing. Okay, for session 2020-2021, teori dah tak masuk dalam PSPM ya. Okay, anyway, kita boleh tengok je what is the advantage and the disadvantages. Okay, now we look at the answer. Okay, for 1 Roman, to calculate the cost per unit of product, for absorption costing, you have to include direct material, direct labor, variable manufacturing overhead, and fixed manufacturing overhead. Okay, how to calculate the fixed manufacturing overhead? Okay, just now at the question, okay, it mentioned 180,000. Okay, for per unit, you have to divide by the production unit, that is 16,000 unit. Okay, so you get 11.25 ringgit. So cost per unit for absorption costing is 91 ringgit and 25. For marginal costing is 80 ringgit. Okay, please don't include the fixed manufacturing overhead. Okay, for 2 Roman, that is for the income statement. Okay, for absorption costing, okay, sales, okay, you calculate the unit sales 12,000 multiply with the sales price per unit is 160. So you get sales 1,920,000 minus cost of goods sold, beginning inventory, okay, kosong. Ya, beginning inventory dia kosong dekat sini. Okay, macam mana kita tahu dia kosong? Okay, tengok dekat soalan. Okay, for January, sales 16,000. Production pun 16,000. So, ending inventory dia kosong. So, ending inventory for January akan jadi beginning inventory in February. So, that's why beginning inventory in February is kosong. Okay. So, we continue. Plus cost of good manufactured and minus ending inventory. So macam mana nak kira ending inventory? Tadi the beginning is kosong plus the production 60,000 minus the sales 12,000. Okay, and then you get 365,000. So cost of goods sold equals to 1,095,000. Okay, sales minus cost of goods sold dapat gross profit 825,000 minus the operating expenses 96,000. So the net profit is 729,000 for absorption costing. Now we look at the marginal costing. Okay. Sales minus the variable cost. The variable cost include beginning inventory kosong, okay, plus cost of good manufactured minus ending inventory. Okay, ending inventory, the unit is 4,000. Just now we calculate. Okay, so you get variable cost of goods sold is 960,000. Okay. Untuk variable sales and administration tak ada. So, sales minus variable cost dapat contribution margin 960,000 minus fixed cost. Okay, fixed cost ada. Fixed cost ada fixed manufacturing overhead and fixed selling and administrative expenses. So total fixed cost is 276,000. Okay, so contribution margin minus fixed cost dapat net profit 684,000. Okay, boleh so far ya? Okay, so we will continue. Okay, so third Roman is to do the adjustment of net profit. Okay, so net profit of absorption costing just now is 729,000 plus fixed overhead in beginning inventory. Beginning inventory kosong. Okay, minus fixed overhead in ending inventory 4,000 unit multiply by 11.25. 11.25 ni apa? Fixed cost per unit. Okay, so awak akan dapat 684,000. Okay, this is apa? This is the net profit of marginal costing. Okay, sama kan? Dapat? Kalau tak sama, you have to search. You have to find out apa yang salah. Okay. Now, question number 4 Roman just now. Profit under the profit are different under the absorption costing method and marginal costing method because okay, the difference in profit due to absorption costing takes into account the fixed manufacturing overhead cost in its inventory valuation. Okay. So what is the three advantages? Okay, kita tengok je. Okay, the advantages is management can evaluate cost behavior and cost can be separated into fixed cost and variable cost. Useful for performance appraisal because variable costs can be controlled. And suitable for cost measurement and analysis and can provide relevant information to perform management function. And fourthly, the effect of a change in sales on profit is easily determined by the contribution margin. While the disadvantages of marginal costing, okay, firstly, use of the report is limited to internal user only. Secondly, the report does not comply with GAAP. Thirdly, the cost of preparing a report is expensive because you have to make 2 reports. Fourthly, ending inventory is significantly undervalued because the fixed manufacturing overhead cost is not taken into an account in calculating the product cost. Okay, and fifthly, sales pricing is inaccurate because only variable costs are counted as product costs. Okay, now we move to the last question. Okay. So in PSPM, okay, the question, okay, is cempaka yang berhad and the direct material is RM33. Okay, but kita dah buat ubah suai sikit untuk soalan ini where the information of the production kita tukar nama kepada Restu Sdn Bhd. For the month of March is as follows. Okay, and then kita pun tukar direct material, soalan asal adalah RM33, but in this question of Restu Sdn Bhd kita tukar jadi RM22. Okay, anyhow, just try to solve the problem. Okay, so the requirement, okay, one Roman is to calculate the cost per unit. Second Roman is to prepare the statement of comprehensive income for the months of 31st March using absorption costing and marginal costing. Third Roman is to prepare adjustment for the net profit. Fourth Roman is to explain why there is a difference in profit. And fifth Roman is to explain why net profit of absorption costing and marginal costing are same. Okay, now we look at the answer. Okay, first of all, we calculate the cost per unit. Okay, the cost per unit for absorption costing equals to RM110, where we include the fixed production that is the RM23. And for marginal costing, only direct material, direct labor and variable for production overhead. So the total is RM87. Okay, third Roman is to prepare the statement of comprehensive income. For absorption costing, sales equals to 675,400 less cost of goods sold, beginning inventory, plus cost of goods manufactured minus ending inventory. Okay, so the cost of goods sold equals to 473,000. So sales minus cost of goods sold equals to gross profit 206,400. And then you minus the operating expenses, that is include fixed selling and administrative and variable selling and administrative. Okay, whatever in the operating expenses. Okay, totaling 86,000. So gross profit minus operating expenses, then you get net profit 120,400. Okay, now we look at the answer for marginal costing. Okay, so for marginal costing, sales minus variable cost. The variable cost is included cost of goods sold variable and variable selling and administrative. So the total variable cost equals to 412,800. Okay, so for cost of goods sold variable, you have to beginning, okay, plus cost of goods manufactured minus ending inventory. Okay, so sales minus variable cost equals to contribution margin 266,600. And then you minus with the fixed cost. The fixed cost include fixed selling and administrative and also fixed overhead. totaling 141,600. So contribution margin minus fixed cost, you get net profit 125,000. Okay, next. For 3 Roman is the net profit adjustment. Net profit of absorption costing is 120,400 plus OHK ni overhead overhead for fixed overhead in beginning inventory. Okay, the unit is 500 unit. Okay, multiply with 23. 23 is the fixed cost per unit, equals to 11,500 minus fixed overhead in ending inventory. Okay, the ending inventory unit is 300, multiply with the fixed overhead cost 23. So you minus 6,900 equals to 125,000. Okay, must be equal with net profit of marginal costing. Sekejap saya ubah sikit sini. Fixed overhead. Okay, jika awak buat net profit adjustment, okay, jawapan tak sama, awak kena cari balik, mesti ada something wrong, dekat income statement. Sama ada income statement under absorption ataupun marginal. Okay, kalau sama 99% betul lah awak punya income statement yang awak buat tadi. Okay, so next question is the difference of profit between absorption costing and marginal costing. So what is the answer? The difference in profit exists between absorption costing and marginal costing because the computation of the cost per unit for absorption costing consider both fixed cost and variable cost, whereas marginal costing only consider variable cost. Okay, so apa point dia? Point dia adalah fixed cost ada dekat absorption costing tapi tak ada dekat marginal costing. Okay, and then for last question, okay, profit in absorption costing and marginal costing will be equal. Macam mana jika absorption costing tu net profit dia sama dengan net profit marginal costing if all produced unit are sold and there is no opening and closing inventory, ataupun if the production unit equals to sales unit. Okay, so I think itu saja question kita. Okay, I hope that awak akan buat semua soalan past years dalam soalan SIC. Okay, this one is the revision. Okay. So, okay, kita dah habis dah dengan soalan revision. Okay. So saya harap itu saja hope awak boleh buat semua soalan dan ulang balik, tengok balik video macam mana cara untuk menjawab soalan. Okay, so apa yang kita boleh concludekan dekat sini adalah soalan dia kalau untuk absorption costing and marginal costing tu, satu, dia mesti tanya cost per unit. Kalau dia tak tanya pun, you have to calculate the cost per unit using absorption costing and marginal costing. Yang kedua, selalunya dia tanya apa? To prepare the income statement. Yang ketiga apa? Yang ketiga, selalunya dia akan suruh awak buat adjustment for net profit for absorption costing and marginal costing. Okey, itu saja dari saya. Okay. So saya hope awak dapat belajar bersungguh-sungguh, buat soalan yang semua. So terima kasih diucapkan kepada semua yang mengikuti premier. Okay, ini adalah rakaman premier untuk revision topik 9. Okay, so saya ucapkan terima kasih sekali lagi. Okay, untuk kali ini oleh kerana ia adalah premier, so tiada sijil disediakan. Okay, oleh itu Assalamualaikum warahmatullahi wabarakatuh. Okay, thank you semua, bye.
Tuisyen online percuma. Tuisyen online percuma. Layari www.academyyoutuber bagi mengikuti tuisyen online secara percuma. Prasekolah, sekolah rendah, sekolah menengah, semua ada di Akademi YouTuber. Rujuk jadual di laman sesawang www.academyyoutuber.com. Semoga masa terluang anak-anak anda diisi dengan sebaiknya. Tuisyen online percuma mestilah Akademi YouTuber.
Dibawakan kepada anda oleh Akademi YouTuber.